just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Okay, guys. Great, we opened new position. All of you who decided to follow trade and open position, stay with me, and we'll see how long we'll have to keep this position open until we'll collect the profit. Okay, well done, guys. I'll speak to you later as soon as I will have some more information.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Quite a lot going on, Matt, on the markets. I know we look at AstraZeneca, the EU summit, and then we look at cryptocurrencies, and of course that massive ship still stuck in the Suez Canal.
Yeah, a huge ship still wedged sideways in the canal, holding up $10 billion worth of goods. As you pointed out yesterday, you know, it's the most important waterway in the world for transportation of goods and oil, and it's still stuck there. They had to call in an elite team to try and pull it out.
Yeah, I've been reading up on the elite team. It's actually fascinating. It reminds me of, the movie Captain Phillips. I mean, because it's just like a massive ship. And Kaylee, it's impacting, of course, everything that we're seeing in trade and markets.
They definitely should make a movie about this particular situation. I'll wait for that to come out in theaters, give it, 2 years? But in the markets, it actually did. Yep, I'm a psychic, Matt, didn't you know? In the markets, though, it obviously lifted crude prices yesterday. We saw the biggest rally for oil since November, actually a 6% move on Brent crude in yesterday's session, but some in the market are saying that maybe was a little bit overdone, and indeed we are seeing prices come back in by about 1.7% on Brent, now sitting below or right around $63 a barrel. As far as the equity markets go, it's a different picture depending what side of the Atlantic you are on. We are lower by about 0.2% in Europe, while here in the U.S. with about 4 hours to go until the U.S. Open, futures are pointing higher. We're up 6 points on S&P 500 E-minis. The 7-year yield is what I'm paying attention to, though, today, Francine. Right now we are basically flat. The market is calm ahead of $62 billion in supply getting auctioned off at 1 p.m. Eastern time. Last month, it was a dismal 7-year auction that roiled the bond market, spurred the tantrum, and of course is what has given yields the boost that we have seen over the weeks that have followed. But the really strong takedown for the 5-year yesterday may be easing some concerns about how today is going to go. As for some movers in the pre-market trading, it's a lift for travel stocks. American Airlines and United Airlines each higher by...
We need to place stop on profit for British pound, and I'm going to place at 136.865, just right here. Okay, so if you already followed it, if you followed it straight, and if you decide to copy, go with me until the end. So you need to place stop on profit too. Don't play a hero, okay?
You also mentioned Bitcoin coming down. Nonetheless, take a look at this chart of absolute crypto dominance. What you see here is 1 year of a bunch of asset classes normalized. Now, the white line is the Bloomberg Galaxy Crypto Index, and it just soars over every other line. In fact, it makes commodities, stocks, gold, investment-grade bonds all simply look flat. So I think it's interesting that crypto has done so incredibly well, Francine, over the last year.
Yeah, now this week, the Fed Chair Jay Powell also joined his global peers in embracing, of course, the idea of a digital currency. He did caution it needs careful preparation, though.
We're not in a mode of trying to make a decision at this point. We don't need to rush this project, and we don't need to be first to market. We have a two-tier system. Central banks interface with banks, banks interface with the public, and we do not want to destabilize that. And therefore, we don't want to compete with banks for funding.
Well, Bloomberg's Danny Berger now joins us for a look at the race to develop central bank digital currencies. Danny, what do you have?
Well, Francine, look, institutions have already embraced cryptocurrencies. Can you imagine the boost they would get if central banks did that as well? And both really the impetus is not being left behind, not being left out to some degree. The furthest ahead we have seen, though, is China, who's already doing real-world trials of a digital yuan. Now, for most of the other countries we've heard from, they're really waiting and seeing what their peers are doing, researching, some cases like the U.S. even experimenting. But there's a reason that Powell there was cautious, and a lot of central bankers are cautious, and that's because of the challenges that this would present. So let me show you my next screen. One of the biggest challenges we do see is this idea of privacy. One of the reasons that people love cryptocurrencies so much is it gives you that anonymity. If it's run by a central bank, perhaps you don't get that. There's also access. If you can't afford the internet or a smartphone, how are you supposed to use this tool? And finally, perhaps the more existential question, the banking system really relies on incoming deposits of savings, that sort of thing. So a digital currency might undermine that or even torpedo it in the worst case. And you'd have to imagine that that is not something central bankers would want to do, Francine.
Danny, thank you so much. Now joining us is Benoit Corré. He's head of the Innovation Hub at the Bank for International Settlements, also, of course, a former executive board member at the ECB, but he's an expert on cryptocurrencies and central banks. So, Monsieur Corré, thank you for joining us. When you look at the various models that central banks have around the world to deal with this, do you already have a preferred model for how central banks should be looking and using cryptocurrencies?
Good morning, and thank you for having me. No, we don't have.
Let's move on. Move further. My stop on profit to 136.895. It will move up right here. Okay. So you need to move stop on profit to 136.895. It will give us 5 pips in profit.
Payment data. I mean, these are big questions, and we need a broad discussion, and the answer will be political. And so the bottom line is it's going to be different across countries. But what we want is to see how it interacts and how the system will work.
Okay, so if we leave politics to one side, what do you think central banks are getting right or wrong on innovation from a purely technical cryptocurrency point of view?
So that's the big question we've been discussing in the BIS Innovation Summit, which started a couple of days ago and is still running with central bank governors and with industry leaders. And I guess, I mean, on the positive side, central banks have always been innovating. I mean, look at everything they've done in terms of monetary policy instruments. I mean, the way we do monetary policy now was just unthinkable only a few years ago, and that's innovation as well. But in terms of technological innovation, because that's your question, there are challenges. One challenge is skills, getting the right people at the right place. One challenge is culture. Central banks too often have a kind of zero-risk culture, while innovation assumes that you can fail forward and you can make mistakes, and that's very much not the central banking culture, and we've got to change that. And I would say the main challenge is complexity, because there is so much going on. I mean, we've been discussing all these issues in the BIS Innovation Summit, and it's really mind-boggling what's going on in the industry. The industry is on fire. It started with mobile payments, then we had DLT technology coming in. Now we have crypto, we have decentralized finance, DeFi. We have a lot going on also in the field of traditional payments. We have AI and machine learning being used increasingly in all aspects of central bank activities. So we've got first to make sense of what's happening. And second, we need a plan, we need a vision. And we don't want the industry, we don't want the big techs take the first mover advantage.
Yeah.
Some countries, Benoit, are considering banning digital currencies, banning cryptocurrencies. How does that, how does the banning of things work out?
Yeah, I mean, look, I mean, I'm not going to speak for them first. These are sovereign decisions. Second, I'm very confident that we can produce the right regulatory framework also for cryptocurrencies, protecting investors. And in some cases, there might be illicit activities going on using crypto, and then these have to be banned, obviously. But I'm on the positive side. I think we're going to work out the right regulatory framework.
Is there a first mover advantage?
Is that for central bank digital currency or?
Exactly. Is there a first mover advantage up for grabs right now?
No, I wouldn't say so, because all countries are different. If you look at the Chinese project, it's very domestic. It's really fit to the Chinese financial system and the way they work and the way they want to regulate it, including in terms of data and privacy. And that wouldn't work elsewhere because they're different. And so each country will go their own way. And in that sense, I don't think there is a first mover advantage. But as I said, the risk is that big tech companies will lock in the first mover advantage, and that they will create an ecosystem that is not fit for CBDC to emerge. And we want CBDC to be possible because it's a matter of public policy and it's a matter of common good. So we need that vision that kind of bridges what's going on now in terms of stable coins, all kind of good private initiatives, and the future which will be organized around CBDC. And we need to map it out so that everyone can go on their own journeys.
But Benoit Cœuré, how do you see central banks, cryptocurrencies actually sitting with mainstream things like Bitcoin? Maybe not mainstream, but more mainstream than what central banks are doing. Are they competitors? Do they sit side by side?
No, they're not. They're not. I mean, Bitcoin can be an investment instrument, and it's not for me to judge on that and to advise on that. But it has failed the test of being a currency. It has failed the test of being a payment instrument, just because the value is moving around so much. And so central banks are focused on instruments that will provide liquidity, that will provide safety, and that can be used as a commodity in the global payment system. And that's why we want to look into central bank digital currency. So crypto has its place under the sun, but it's different. It's not a payment instrument.
How important is control of currencies for central banks? Is the fear of losing control part of what's at play here?
No, it's not about control. It's about providing security to citizens. I mean, the remit that is given to central banks by parliaments, by citizens, is to protect financial stability, and we want to be able to just do it. And if you want to ensure financial stability, you need to be able to inject liquidity at the heart of the system, to be a lender of last resort. And that's what we've been doing in real-time gross settlement systems, and that's what we want to keep doing in a digital ecosystem. And that's what CBDC is about.
Benoit Cœuré, do you think Diem, the new name for Libra, is on track to succeed?
I don't want to pass a judgment on that. There are regulatory processes in different places. The only thing I can say is that it has to be a global discussion. It wouldn't be wise to authorize a global stablecoin without global coordination. I'm pretty confident that this is taking place.
Benoit Cœuré, thank you so much for joining us today. He's, of course, the head of Innovation Hub at the BIS, and, of course, that conference going on until this evening. Now, speaking of innovation, setbacks, volatility, and inflation anxiety have not shaken investor Cathy Wood's faith in the power of innovation. We'll discuss that strategy next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Francine and Matt, I want to take a look at one of the most influential investors right now, and that is Cathie Wood, because her funds, ARK Invest ETFs, have been one of the poster children of this fierce rotation we have seen from growth into value in 2021, as we've seen yields moving higher, and a lot of those valuations of some of those high momentum plays have been called into question. Her ARK Innovation ETF, really her flagship fund, has been a huge victim of it. Since its peak in mid-February, it is down by more than a quarter, and it's down about 8% on the year thus far. But Cathie Wood did not lose her faith. Instead, she used the opportunity to buy the dips in some of the holdings of this fund, like its top holding, Tesla. And for a while, it looked like investors weren't all too shaken in their faith either. Yes, we saw a record outflow in the last week of February. That is, for those listening on radio, it is a huge red bar down on our chart on the Bloomberg terminal. And then it was followed 2 weeks later by a record $1.3 billion inflow. So it seemed that investors weren't all too rattled and had kept their faith in Cathie Wood, who of course was an outperformer in 2020. But once again, in the last 2 weeks, we have seen those outflows resume. So a question remains about the fate of ARK's ETFs, Francine.
Kaylee, our Matt Winkler, editor-in-chief emeritus of Bloomberg News, has come out with a new column on Cathie Wood and joins us now to look at what he's learned and the conversation that they've had. Matt, thank you so much for joining us on Bloomberg Surveillance, the early edition. Now, as you write in the column, Cathie Wood was confronted and survived doubters before. Why could this time be different?
I'm not sure it is different. I think it's actually very similar to what she's faced in the past. Remember, Cathie Wood is not a newcomer to investing. She's been around a long time. She and I actually have the same birthday year. So we're contemporaries. And if you want to go back to, the beginning, she actually got her start calling the peak in interest rates in 1981, when all the wise men said we were going to have runaway inflation as far as the eye can see. So think about that in the context of where we are now. Back then in 1981, everybody was scared to death that inflation was going to spook us into the new century. And of course, we had a secular bull market in bonds, and interest rates did in fact trend lower. So here we are today. And really what she's saying is, if you go back to 2000, which was the dot-com bubble bursting, there was so much innovation there that really didn't get started, but is now coming to fruition. And her funds, which she launched in 2014, are the beneficiaries of that. So I think what's missing in all these headlines that were just cited is that she's managing 8 times more money than she managed at the bottom of the coronavirus market a year ago. 8 times more money. Okay, so that's really a measure of confidence in her. 2, her funds, whether you look at them on a 1-year basis, a 3-year basis, or a 5-year basis, have outperformed, if you will, the collective ETF market as a whole. So even into the first 3 months of 2021, she's still doing better than just about anybody else. So this looks more like a lot of noise.
I think that's the interesting aspect of this, Matt, is that even though her fund has gotten so much bigger, she's managing so much more money, she's still outperforming. And, the concern is that as the fund gets bigger, it's much more difficult to deliver returns. She actually told you that she's not even thinking about capping or closing the fund to new money, right? She could see it get even bigger from here.
Yeah, I mean, look, that was a complete misunderstanding in the market of ETFs versus mutual funds. The strategic composition of the fund does not change regardless of the market's fluctuations. And that's a really important point that pretty much was lost in all of the reporting. Everybody who was criticizing her were equating mutual funds with ETFs, and they're fundamentally different in that respect. Secondly, Cathie Wood is one of the most transparent investors we've ever seen. I mean, she, and that's a good thing, by the way. Everything she does, you can see from day to day, and you can imitate her if you wish. The question about is the strategic composition going to change? Is the weighting of equities going to remain consistent regardless of the market's fluctuations? The answer is yes on both counts. She's not affected or buffeted by outflows that you're talking about.
Matt Winkler, thanks so much. Editor-in-Chief Emeritus there of Bloomberg News with a great new column out today. You can find it on the terminal or on our website. Now, we also hear from Intel's chief executive on how he plans to chart the company's path back to chip-making glory. This is Bloomberg.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Because I'm committed to the best products in every category that we participate in, the best cost structure, and the most resilient supply chain. And we see this ability to leverage the industry, but also become a major supplier of foundry to the industry. This is a winning formula, and the world is demanding more semiconductors than ever before. we were getting more digital, and then COVID happened, right? And it's accelerated. So we need to step into this in a big way. And I think our strategy is uniquely positioned for Intel to be able to execute on.
Now, investors loved hearing you say Intel's fixed all its problems. But Pat, you've been back at the company for just over a month, and we're talking about production deadlines that were missed over years. What makes you so sure that you've diagnosed and solved the manufacturing problems?
We're moving to a yearly cadence of process innovations following that. So we're on track to not only fix the issue, but be at parity, and then parity plus, and ultimately, we believe, sustained leadership into the future. So the path we're on, looked at the data quite extensively over the last month or so, and came to the conclusion, yeah, the team got it figured out. We're back. And as you've seen more broadly with our new Intel IDM 2.0 strategy, as I've declared, Intel is back.
The Intel chief executive, Pat Gelsinger, speaking to Bloomberg's technology, Emily Chang. Now, for a look at what else we're watching, let's go straight to Kaylee, who's looking at treasuries.
I am going to be watching Matt Miller on Bloomberg Markets at 1 p.m. Eastern Time when we get $62 billion worth of 7 years hitting the market, being auctioned off by the Treasury. And remember, if we take it back to February, it was the 7-year auction that inspired the bond market tantrum with really weak demand. But we did see a really strong takedown for the 5-year auction yesterday. So that seems to have eased some market concerns ahead of it. Of course, the 5-year isn't necessarily indicative of what will happen with the 7-year. So we're all going to have to watch Matt at 1 p.m. Eastern.
Please do. Thank you very much, Kaylee. Please
My pleasure.
Tune in. Meanwhile, I'm going to have one eye on the Treasury auction and the other on the Suez Canal, because I've just gone into full-fledged panic mode. Francine pointed out there are live animals on some of those ships that are blocked up.
Okay, guys. Okay, traders. As you can see, we need to move even higher to 136.945. It will give us 10 pips in profit. And in your case, just check with your broker, or you can check, depends what who your broker with. You can check how much broker pays you per pip. All right. Good trade. Nice entry. If you would like to find out more, you can get the strategy, how we trade, why we entered this trade just, as you can see below the red candlestick, what's happened. You can get it from strategy available on our website. I also have quite lots of people get interested into have a chat. I got 15 minutes one-on-one trading session, so you can register through the information you can see on our streamer. Okay? Speak to you later. Stay safe.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We are reemerging from a recessionary environment. And of course, this recession is different from some of the others.
The dollar was very, very expensive, and it's still expensive because the U.S. had exceptional monetary policy.
While a bunch of the markets could look frothy, there might be room for the Fed to normalize rates.
He wants a steep curve, and we're getting that. And I think we all better get used to that.
For the Fed to think about inflation, they always keep on emphasizing it has to be persistent. It has to really be a situation where the whole economy is boiling over, and we're just nowhere near that point at this stage.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The equity rally hitting the brakes from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene away all week. Equity futures up 8 points on the S&P 500. We advanced 0.2%. Lisa, some turmoil in this equity market over the last couple of days.
And I wonder how much this has to do with technical factors, whether it's retail investors putting their money in other places other than the stock market, or whether it has to do with the idea of hope going far enough, and now people saying, show me the proof in the economic data, show me the proof in the earnings, John.
Show me the money. The forecasts have been lifted on yields, on growth for the year ahead. Show me the data. I'm told the ship is still stuck in the Suez Canal. And Lisa, I find this story so interesting because this, for me, is just a tease of what the data is going to look like in the months to come and what the conversation will sound like. When it comes to the ship, people will sit here and say, it's stuck for another day. Maybe it doesn't get out. Maybe it'll be there forever. What does it mean for global trade? What would it mean if we didn't have the Suez Canal functioning? Wait for the inflation data that will come in a couple of months' time, Lisa. When this inflation print starts to pick up because of base effects and people actually see it, people will sit there and say, what if it never goes away? What if it stays with us? What if the inflation is higher? And you'll get Chairman Powell that sits here and says it's transitory, and you'll get other people who will sensibly sit here and say they will move the ship, the Suez Canal will function again. And this, for me, is just a tease of what is still to come in months to come for the economic data.
John, you seem deeply scarred by people emphasizing this story. I don't think I've heard anyone say, what if the ship never gets unstuck? There is a question, though, about the broader implications. And I do have to say that this story is really phenomenal on just a technical level. The idea of people unloading the oil from this tanker, of people taking some of the water from the ballast of the ship that's used to balance it and steady it, because they need to lighten the load on this quarter-mile long ship in order to get it off the pier. The bigger question here is the supply chain disruptions, for a variety of reasons, have lengthened and become some of the more difficult aspects for U.S. business leaders, possibly the most that they have seen in more than a decade, which raises a question of how much of a damper this gives to growth on the short term, and as well as how much that distorts inflationary pressures. Again, John, to your point, not forever, not necessarily even for a year, but in the short and near term.
But have you seen how big the ship is, Lisa? Have you seen it? Have you seen how big the ship is?
Yes.
How many times are we going to talk about this through the morning? From New York City, let's get to the price action this morning. Good morning to you all. We look like this on the S&P 500. S&P 500 futures up about 0.25%. We advanced a little more than 9 points. So the S&P 3890, it has been troublesome for small caps. We'll talk about that in just a moment. Outside of that, in foreign exchange, 118.10. Important EU summit a little bit later. The euro weaker, just about holding on to that 118 handle over the past week. In the commodity market, WTI back to a 60 handle on crude, and into the bond market. Lisa's going to run you through the supply in just a moment. Lisa, your yield on 10s up a basis point to about 161.91.
calm. And I think that that is the message right now for the bond market, which is telling in and of itself, and we'll get there. But before we get there, I want to run you through some things that we're watching today. 12 p.m. at noon, we're going to be hearing from the big tech CEOs on Washington, D.C.'s hotspot on the seat in front of the House committee. Facebook's Mark Zuckerberg, Google's Sundar Pichai, and Twitter's Jack Dorsey all testifying on their role in distributing information. This comes on the heels of the riots in January. This comes on the heels of disabling former President Trump's accounts, and it will be really keying in on that Section 230, their exemption from liability with some of the information posted on their platforms. Very interesting to see how they try to get ahead of regulation that is almost inevitable for these big tech giants. 1 p.m., this is what we're all watching, even Tom Keene from the beach, because evidently he's watching the technicals of bond auctions by next to the pool. The U.S. is playing this.
Okay, traders, new order arrived. I'm going to place an order to buy euro. The price I'm looking to buy, 118.10. So let's see if I'll be able to buy at 118.10. Okay, so if you like to get into euro against United States dollar, here is your chance to buy euro at 118.10.
The vaccine rollout and some of the guidance around schools. People are going to have a lot of hard questions for him today. I also am very curious to see how he pushes forward to next week's release of his budget priorities, how much he's going to lay into the infrastructure plan that people are talking about in Washington right now.
I just want to see if he keeps his cool as he faces some questions, Lisa. Finally, did you see Secretary Yellen in the last 24 hours? Just a little bit of a crack there from Secretary Yellen losing her patience with Washington. And I think most people who saw that exchange would forgive her for losing her patience, but there was just a little bit of a crack from the usually very calm, level-headed Secretary Yellen in the last day.
How
okay.
far are
New position opened on euro at 118.10, just right here. Okay. So let's follow this trade. Let's see what's going to happen. I want to point out, we're trading real money, so this is not demo account. So don't try to misunderstand that we are trying to teach. We're not teaching anybody. We just ask you if you want to make money with us, you can follow our trades, and that's it. We're traders, they trade us. We have a group of people who trade live. Our money, other people's money. So if you would like to join, you can follow our trades. If you want to get strategy, you can then get strategy from us. Nothing free in this world. So you need to pay for this strategy because it took years to develop this strategy. Like Ray Dalio said, he sells his strategy for £1 billion. And we're selling for a bit less money. So as you can see, it moved up. And anybody who already into this trade, well done if you manage to execute and fill this position. Let's see what's going to happen next. I'll speak to you later.
Head of FX strategy for the United States. Dara, let's start there. Your call. You think what we're seeing right now is the trailer for the movie you'll see play out in 22. Can you give me a better understanding of what you mean by that?
Look, yeah, everything we're seeing now makes sense if you believe, U.S. exceptionalism, strong U.S. growth. If you believe that's going to translate into a shift in Fed rhetoric and a shift in Fed policy, be it tapering or talking about tapering, whatever. And that's the market reaction function at the moment. The problem is everything we're hearing from the Fed, literally everything is, well, we're not moving it. I don't know how many times they've said the word patience, even just this week. But I think what they're doing is they're comfortable with the line of logic. They're just not comfortable with the timing. And, as you said, they want to see if this ship gets unstuck or not. And on the inflation front, and that's the key. So, I think we've got another 3, 6, 9 months where this dollar is going to be under a little bit of selling pressure. We've always said it'll be modest, 3 to 5% perhaps. As the market is forced to kind of snowplow further into the future when they think that shift in Fed chat and policy is likely to happen. I think it's much more towards the end of this year. than what the market wants us to believe, that there's going to be some kind of shifting guidance, perhaps through the summer months.
I love that that's our discussion right now. Everybody just wants to know, including the Federal Reserve, whether the ship is going to become unstuck or not. Everyone is watching those cranes start. There's also a question. President Biden is going to be releasing his 2022 spending plans next week. A lot of people are looking toward where he will put those infrastructure dollars. Will anything in what he says next week affect your view of a weakening dollar for the rest of this year?
Well, it has a bearing. I mean, it's one of the reasons we don't look for a marked decline in the US dollar is the fact, the US economy, which is surprising to the upside, has been supercharged by, fiscal stimulus, the rescue plan. And now we're talking about layering potentially, another $3 trillion on top of that over the coming years. It can't have been a coincidence. Jonathan talked about
stop on profit, the 118.12. So you need to place stop on profit at 118.12 right here. Okay. In our case, we're managing to place because broker gives us 2 pips in order for us to place stop on profit. We can we need to wait until broker will allow us to place stop on profit. All this information based published in the strategy, so you can find out. I try to say this to new traders. For all of you guys who was trading for years or experienced traders, you know that you cannot place stop, like you call it, sometimes they call it stop loss. We never place stop loss unless broker gives you some spread, right? So if you want to place stop on profit at 118.12, the price supposed to be 118.14 or sometimes 118.16, even higher if it's the pairs goes over the weekend. All right. Okay. Anyway, we place stop on profit already. So all of you guys just wait until broker will allow you to place. I hope you already managed because we place stop on profit on higher level. And let's see what's going to happen next.
Well, this is the reason why perhaps the answer to your question of why hasn't the euro weakened more versus the dollar, really perhaps this is the answer as to why, which is people are looking forward to a time when the euro does see the light at the end of the tunnel with respect to the pandemic. I just wonder if it takes longer to get there. The longer it takes for the vaccination rollouts, there's sort of a compounding factor, especially with some of the variants that have come out in terms of how many people have to get vaccinated to reach herd immunity. I think those are some of the questions that we're going to be asking more in the next couple of months.
It's
John.
a really good point, and they're really important questions, Lisa. You're right to bring them up. Alongside Lisa Abramovich, I'm Jonathan Ferro. Joining us a little bit later, 7 a.m. Eastern Time, Chris Ferrone, Strategic Partners Head of Technical and Macro Strategy. Looking forward to that chat a little bit later. Equities are high. We bounced back 10 points on the S&P, up about 0.25%. Yields high by about a basis point on 10s to 162. A little bit later today, some supply from the Treasury. And President Biden, his first proper news conference as the President of the United States. We'll talk to Kevin Cirilli a little bit later on the program about just that. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It's the first real test on North Korea for President Biden. Kim Jong-un's regime fired 2 ballistic missiles, a violation of UN resolutions. The South Korean military says the missiles landed in waters between Japan and the Korean peninsula. It was the first North Korean missile launches in roughly a year. An elite crew of salvagers will try to free that massive container ship that's blocking the Suez Canal. The stakes couldn't be higher at what is considered the world's most important waterway. About 180 ships are gridlocked along the canal, which connects the Red Sea to the Mediterranean. They're carrying roughly $10 billion of oil and consumer goods. The Securities and Exchange Commission reportedly has started an inquiry into the frenzy over SPACs, the special purpose acquisition companies. According to Reuters, the SEC has sent letters to Wall Street banks on their dealings with SPACs. Regulators want to know about deal fees, internal controls, and compliance. And AstraZeneca has reported a slightly lower effectiveness rate for its coronavirus vaccine. That's after the results of an American clinical trial were criticized as outdated. Astra says the vaccine was 76% effective in its US trial. That's down 3 percentage points from the first report. The discrepancy could delay the shot's approval in the US. Global News 24 hours a day on air and on Bloomberg Quick Take.
See what's happened with British pound. We will move our stop on profit even higher to 136.995, right? 936.995. It gives us 15 pips in profit. So all of you guys, if you follow trade on British pound, please press place stop on profit even higher to 136.995. Good day today, right?
Expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal time for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The financial institutions look healthier now, and I believe they should have some ability to abiding by the rules to make returns to shareholders.
The big banks have already seen the green light. Janet Yellen, the US Treasury Secretary, from New York City this morning. Good morning. Alongside Lisa Bravitz, I'm Jonathan Ferro. Tom Keane back with us on Monday. Here's your price action this Thursday morning. In a couple of hours, we'll bring you initial jobless claims in America. Going into that, yields are higher on 10s by a basis point to 162. In the FX market, not much price action. Euro dollar 118.13. And into the equity market we go, with equity futures higher by 10 points. Call it 9. The S&P 500 up 0.2%. The NASDAQ up by around about 0.4%. The Russell, it has been a struggle for small caps in America and EM as well. A struggle this morning also for two retailers I want to talk about just briefly, Nike and H&M. And in the words of my colleagues here at Bloomberg, they face a really important decision right now. Embrace cotton from the contentious Xinjiang region and come under attack in the West, or reject it and risk a boycott.
I'm going to move British pound further to 137.945. 937. Sorry, 045. 137.045. Okay. So if you follow the trade, like again, I want to remind you to please do place stop on profit higher. You will enjoy more profit. Okay.
About boycotting certain brands that are choosing to boycott cotton from that region in China.
This is such a sensitive issue, and it highlights the conundrum for a lot of multinationals, and not only them, but frankly for the big banks. And they've been expanding in China recently while also trying to ease some of the tensions in the United States. I am very curious as to the messaging and frankly as to how much pressure the population in China continues to exert, even if the Chinese economy continues to slow.
This is a question that I have no doubt will come up a little bit later in the news conference with the President of the United States. Let's get down to DC and catch up with Bloomberg Government's Jack Fitzpatrick. Jack, it's been a while. In fact, since he's been the president, we haven't seen one. We get a news conference a little bit later. Why has it taken so long? And what do you think? Where do you think the emphasis will lie a little bit later in Washington?
Well, there hasn't been that good an answer to the question of why it's taken so long. He's done some interviews. Overall, it seems like Biden has tried to keep the focus very much on the COVID response and go with a sort of controlled message by the White House on laying out the next steps there. I do think this press conference is going to be a challenge for them because this is where all the other questions come up. You can ask about China. You can ask about what's happening at the border. You can ask about gun control and how they actually plan to get something done there. So this is probably going to take the focus for the first time off of the things that the White House wants to talk about laying the schedule out about their legislation and their response to the pandemic.
Jack, I want to pick up on what John was talking about and sit on it for a minute, this idea of the corporate impulse in China from the United States and how Biden's going to push back on that. There was a story today on the Bloomberg saying that the U.S. stimulus is going to basically fuel Chinese growth, that about $360 billion of the $1.9 trillion stimulus will go toward exports to international companies, with about $60 billion going to China. How will Biden push forward and show how he plans to attract investment and keep investment in the United States at a time when this is a global world and he needs the companies in his nation to do well?
Well, at least he's got another shot at it because he's planning another big bill. He's framed this so-called infrastructure bill almost as a broader economic competition to catch up to China on infrastructure and more in terms of boosting the U.S. economy, really in ways that are much more broad than just transportation infrastructure. When it comes to the specifics of what you're talking about, whether companies are going to turn away from Xinjiang products, that's a very tough one. We haven't gotten an answer from the White House on exactly how they're going to address some of the more private sector related issues, but clearly just in terms of economic development in the U.S. and how that plays into an eventual tax bill. That's a significant focus. Maybe raising the corporate tax rate might be counterintuitive to keeping everything at home, but that is a major focus for tax and economic development legislation coming up.
Yeah, Jack, that's got to be the question right now, I think. And I sort of talked about Walt Disney Company in the last 12 months when they put out the movie Mulan, and at the end of the credits, they thanked some of the policymakers from Xinjiang. And that, for me, just really highlighted the issue that the US government has got right now, regardless of who is in the White House, whether it's President Trump or President Biden for that matter. These companies, the poster childs for corporate America, want to be in China. And to your point as well, how does this administration argue that they should come home and invest at home and at the same time put the corporate tax rate back up towards 30%, Jack? What have you heard from corporate America? Are they lobbying the government on that front? And I imagine they are, of course. And how aggressively? And are they making any headway whatsoever?
Well, there's a lot of focus on that, although, the Biden administration is in a tough position there. He campaigned consistently on raising the corporate tax rate to 28%. We're actually now hearing, this may be a little bit late, but we're hearing from Bernie Sanders, why not take it up to 35%? There's going to be a lot of back and forth, and I think you're going to have to get well into the details beyond just what the corporate tax rate is for keeping investments in the U.S. But I would say the overall discussion and the rigidity of Democrats' stance in absolutely significantly increasing the corporate tax rate kind of cuts against this conversation we're having. So it's probably going to have to be other issues in terms of IRS tax enforcement, that kind of thing. It does not seem like Democrats are going to get knocked off of a solid corporate tax rate increase as long as they can manage to get it through.
Hey, Jack, good to catch up. Good to see you. Jack Fitzpatrick down in D.C., a Bloomberg government reporter. Lisa, that's the issue right now. I see a stick. I see another stick. I don't see a carrot at the moment to get these companies to do what they want them to do.
Although the Intel news this week, I think, raises some questions about whether there are carrots that just haven't been advertised in terms of incentives to build plants in the United States, or whether that was just sort of a go-it-alone approach from them. I'm curious to see Joe Biden's temperament in this news conference. Yes. A lot of people saying he was one of the most untested candidates in history based on the way that the election campaign rolled out, just because of the pandemic and everything else. Is that really the case? I mean, he's pretty much a veteran. I think there are a lot of questions around what this will be like.
He's a veteran. He's still uncomfortable facing questions. Gets frustrated. You can see it. The best of us do. Not including me. Of course, Lisa. You and I just ask the questions. We would never want to face them. Of course. Equity futures on the S&P 500 up 0.2% this morning. We advance a little more than 10 points. In the bond market, yields up by a basis point. The 10-year 161.56. In the equity market, small caps, emerging market stocks, some problems, some turmoil. We'll talk about that in just a moment. From New York, this is Bloomberg.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio. Alongside Lisa Bravitz, I'm Jonathan Ferro. Here's the price action, a bounce back, similar to the move we saw yesterday. Something about the morning where we snapped back in the equity market. Something about the afternoon where we really start to fade aggressively again. We can touch on that a little bit later. This morning, equity futures up by about 1/4%. On the NASDAQ up by 0.4. The Russell bouncing back by 1/3 of 1%. It's where the Russell, the small caps, that's where the pain has been over the last couple of weeks. Since the middle of March, down almost 10 percentage points now. That cyclical trade, it's not just the NASDAQ, the cyclical trade starting to roll over just a little bit. And I can't point to the bond market as to why. That's not the whole story here, but let's talk about the bond market. 2s, 10s, 30s. Last week, 175. Then the bid came back in, just about holding on to 160 now, on a 10-year at 161.38. Yields have been creeping higher, as you know, over the last couple of months. We've talked about it all the time. But over the last week or so, a bit of stability. Seen that reflected in various parts of the curve when we get supply this week.
Okay, guys, position closed on euro at 118.12. We got 2 pips in profit. In our case, we earned £200. In your case, it's all about how much profit brokers pays you per pip. Good trade. Yeah, well done. It took us about 25 minutes to complete this trade.
Over the last month or so by more than 10 percentage points. We are well off the highs now. Granted, keep going back to it because I know I'll get pushed back on the issue. Massive rally. I know, huge rally, but we're talking about the correction now, Lisa, and whether that's got legs or whether we need to see something else develop.
And there's a question, how much is this driven by dollar strength and how much does this have to do with China? And the fact that China's shares actually in the nation have declined 15% over the past few months. And this is on the heels of expectations of slower stimulus, highlighting concerns both about that region and possibly slower growth as they transition to a more mature economy, as well as, is this necessarily the path that the rest of the world is going to take as some of the central bankers take their pedal off, or take their foot off of the pedal? Enda Kern joining us now, Bloomberg Chief Asia Correspondent. And can you talk a little bit, how much is the Chinese Communist Party actually reducing stimulus? And talk about whether that really is what's behind this rout in Chinese shares.
Well, good morning, Lisa. Look, there's no doubt that China is in a position to taper some of its support. We're seeing a pretty robust economic recovery. Our own Bloomberg Economics upgraded their forecast for China today to over 9%. We're seeing a big story on the export side of things. The retail and services are lagging, and investment, I should say, is lagging the broader recovery. But nonetheless, the authorities are in a strong position. The central bank is signaling it can take its foot off some of the gas. Now, the fiscal pullback isn't as tight as you might imagine, but they are nonetheless trying to rein in some of that deficit. But I think the bigger point, though, is that regardless of how you slice and dice what China is doing, it's definitely ahead of the curve or on a slightly different path to where the rest of the world is. We see what's going on in the US, as you well know. They're going full out on fiscal and monetary stimulus there. We know the Eurozone is pushing out stimulus too, as are other major economies. But China, while it does continue to support the money, to support the economy with official sector money, it is also tapering that and signaling that it will continue a fairly disciplined approach. So there is definitely a divergence happening between China and the world.
And also because this economy was first out of this crisis, Ender, we've got to talk about that as well. This recovery is a whole lot more mature than what we're seeing anywhere else. And can we talk about the tension between the US and China right now, and from where you sit in Hong Kong, looking into the mainland right now, how's that playing out?
Well, look, this is an ongoing feature, Jonathan. On the pure sort of economy side of things, remember we spoke a lot about decoupling over recent years, but actually on the merchandise goods trade, China's sales are going gangbusters to the US. As you know well, China can't ship enough of its goods to the US market. China on the financial services side continues to open up, especially to US banks. So we're seeing Wall Street make progress in there in terms of the joint venture operations that it has and what they can own. But there's no doubt, though, in terms of the bigger picture, these tensions only seem to be getting worse. We saw that move with sanctions this week, both from on the US side and including the European Union and other countries squeezing in on China over Xinjiang and other human rights abuses. And we know that there's ongoing tension over the technology space, for example. China is doubling down on a big push to develop more of its own know-how and develop its own technology-driven economy, so it doesn't have to rely on the US as much. So I think none of these tensions are going away. The message that came out of Alaska last week was, if anything, it shows you where things are right now, which is it's pretty much a rough patch between both economies and isn't likely to improve in the near term.
And just to wrap up, and ahead of a conversation we're about to have about the U.S. perception among the public toward China, what is the Chinese public's perception toward the U.S. right now? How much support is there for the Communist Party versus support for the U.S. government in some of their counteractions to the PBOC?
Well, always difficult to be, scientific about gauges of opinion in mainland China, Lisa, but we do know through the open source channels like the state media in China and through the social media, certainly there's a bombastic nationalist tone now in terms of the rhetoric in the press and in terms of the commentary in social media. There certainly does seem to be a broad kind of groundswell of support behind the Chinese cause, so to speak, and against the US side. And I would say there's definitely a streak of nationalism going on there. You only have to see what the Chinese diplomats themselves are saying globally. So there's no doubt that I think opinions are inflamed on both sides right now.
Globally and publicly as well. And good to catch up. Anna Curran, Bloomberg Chief Asia Economics Correspondent. It's the one rare area, one of the few areas where we actually have agreement down in Washington, D.C., how to confront a rival superpower. Let's bring in Mohammed Yunus now, Gallup Editor-in-Chief. Mohammed, let's start there. The perceptions of a rival superpower, how we should engage a rival superpower. What have you learned in the polling you've done recently?
Well, in our World Affairs survey that we conducted in the first half of February, we basically asked Americans about their favorability or perceptions of a series of nations. What we found is a record low in favorability of China, and this trend goes back to 1979. Today, 20% of Americans say they have a favorable view of China. In this poll, we also ask about perceptions of who the greatest enemy is of the United States. In the past, North Korea got a lot of attention back in 2018 when there were a lot of missile launches and rhetoric going back and forth. This year was the highest record ever, and this trend goes back to 2001, where 45% of Americans view China as the greatest enemy that the United States currently faces. It's interesting that half of Americans also perceive China's economy to be the leading economy of the world. And when we ask Americans about the critical threats to the vital interests of the United States, China is one of the many, actually, areas where there is agreement on both the right and the left in terms of viewing its economic rise as a threat to the United States. So 78% of Republicans say it's a critical threat, 52% of Democrats, and about 6 in 10 Americans overall.
Mohammed, I always think language is important. Whenever we talk about this topic, I try to use the words Chinese Communist Party and talk about the government and not the Chinese. And I know a lot of people do that innocently, without malice. They will refer to China as the Chinese and not the Chinese Communist Party. Mohammed, the reason I think this is important right now is because I do wonder, at a really tense moment for the Asian American community and the deep issues, deeply upsetting issues that are being increasingly highlighted over the last several months, whether there is a risk of conflating the issues around the Chinese Communist Party and they bleed over and spill into and exacerbate maybe much more nastier cultural issues here at home.
Absolutely, and it's a now more important time than ever to really make that distinction. I'm happy you give me the opportunity to do that. First of all, in terms of favorability, Americans on the whole really do distinguish between sort of China and just Asian people in general. The data actually hand that out. Japan has one of the highest favorability ratings of any country we ask among Americans. Taiwan's favorability rating is on par with Israel. So the notion that the favorability of China or Chinese policies in specific with trade, and we have data to show that that's really where the concern is with the vast majority of Americans, certainly shouldn't be read to mean suddenly that everybody in America or 45% of the people in America have negative feelings towards Chinese people or citizens. Of course, we've seen a series of very horrific hate crimes, not only in Atlanta, but many smaller ones across the United States. It's not really new for the United States, but what we know from the past is that, take trade, for example. Americans are very positive on trade. They tend to be very positive on trade with most countries that have a major trade relationship with the United States, Mexico, Canada, the EU, etc. But they consistently had a less positive perception of the trade relationship with China in particular. So we definitely don't want to conflate these two issues. First and foremost, because human beings, of course, should always be treated as such and not a reverberation of policy. Somebody named Mohammed in the United States, I can comfortably say that I strongly believe in that.
Yeah.
But in addition to the fact that these issues are real, they're long-standing, and a lot of the rhetoric that we saw even around the COVID virus had likely egged on some of that concern. But that doesn't change the fact that most Americans still know the origin of this pandemic wasn't China. There's a huge issue with the World Health Organization and information about the origins of it. So the issues are real, but it's absolutely essential, of course, that we separate policies from persons.
Mohammed, we only have about 45 seconds. What is the implication of public feeling right now in the United States, increasingly that China is the biggest economic threat? Is it military action, or is it just more support for actions down in Washington, D.C.?
I think overwhelmingly Americans view this really as an economic challenge. From the perspective of public opinion, obviously there's a huge security.
Okay, guys, new order. I'm placing a new order to buy again euro. I will remove all these. And the order I'm going to place at 118.0996. Okay, 118.096, just right here. Let's see if I'll be able. It moved, as you can see, it moved quite substantially up. Okay, I'll speak to you later.
1811, unchanged, going into an interesting summit a little bit later, and an interesting news conference with the President of the United States, his first one as the President of the United States. It's taken a while. From New York, equities up. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A legendary Dutch salvage firm has taken up the task of trying to free that giant container ship that's blocking the Suez Canal. The ship ran aground on Tuesday, and it's causing a massive traffic jam just outside the waterway that connects the Red Sea to the Mediterranean. About 180 ships are waiting to transit the canal. New York Governor Andrew Cuomo reportedly arranged for his family to have special access to government-run coronavirus testing last year. According to the New York Times, the testing mostly happened last March. That's when testing was not widely available. Samsung is preparing to release the next generation of memory chips to keep up with the growth of data centers and artificial intelligence demands. The world's biggest memory chip maker promises to double speeds and offer the biggest capacity yet. The chips will come out later this year. And Fidelity has applied to list a Bitcoin exchange-traded fund. It would track the cryptocurrency using pricing from US-based exchanges. Several other Bitcoin ETFs proposals in the US have failed to win approval from the Securities and Exchange Commission. President Biden will hold his first formal news conference at the White House today. He's certain to face questions about two recent mass killings, the coronavirus, and a surge in migrant children at the southern border. Critics have accused the president of not being transparent for waiting more than 2 months to hold his very first news conference. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists.
Okay, guys, the order to buy euro cancelled. As you can see, it's not much point to hold this order. I need to wait until the momentum will change and direction of the chart will change. Okay, speak to you later.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Trading revenues coming in better than expected. Everything cash, 1.4 trillion.
Let's move higher. Stop on profit for British pound. I'm going to move to 137.095 right here. Please, guys, do as well. So if you place, if you're already holding, like we do, if you decided to copy this trade, please place a stop on profit higher. It gives you more profit.
Do, because that's what allows people to say, okay, here's what I can do, here's what I can't do, I'm going to continue to follow the rules. When you ask people to make up the rules themselves, they're always going to veer on the side of what feels more comfortable for them.
Lawrence Sauer there, Johns Hopkins University Assistant Professor of Emergency Medicine. Got to be the debate at the moment. If you've had a vaccine, what can you do? We've had a government in the United States, worldwide, tell us what you can't do for the last 12 months. People want to get back to normal. And once they've been vaccinated, at least they want to feel like if they have been vaccinated, they can go ahead and get back to normal. And still, the guidance from the CDC is pretty light. Let's say it.
Well, the push-pull here of trying to encourage people to get vaccinated, there's actually a reason to do it, even as we hear that some people are feeling tired or their arms hurt afterwards, versus also making sure that everybody can get it and that they are showing some caution with respect to the spread of the virus. Again, we are living in the fastest moving science experiment in recent memory, John.
And the fastest moving economic experiment as well that we'll be discussing, no doubt, for a long time to come. In your market, this is what we look like. The S&P 500 up 10 points. On the S&P, we advance 1/4%. NASDAQ up by 0.4%. Stability into the bond market at 161.21. Your yield unchanged on a 10-year maturity. Euro dollar unchanged too at 118.12. Touch briefly on this tension between China and the United States and the region of Xinjiang. And Lisa, just quickly, a statement coming from the China Cotton Association issuing a statement urging Western countries to stop wrongful actions by putting restrictions on Xinjiang textile products. For those of you up a little bit later this morning, I know it's still early for many of you, 6:50 Eastern, forgive me, I've been conditioned by this for the most part of the last decade, that 6:50 somehow is late, Lisa. My issues, I won't talk about them too much. The statement came from the China, I won't go there, the China Cotton Association issuing this statement, the conversation around H&M and Nike this morning, and maybe talk of a boycott in the mainland in China because they've been boycotting cotton from that contested region in the mainland.
And it raises questions for the U.S. government and, frankly, the European Union. If they are going to put sanctions on the Chinese government, on the Communist Party, what are they going to do to support their companies that have ramifications pressed against them by the Chinese government and by the population with respect to boycotts? Will they support them on the other end, John?
Looking forward to the conversation with Kevin Cirilli a little bit later, not about what time you and I have to get back up and whether I'm slowly breaking over time and about to have some kind of existential crisis. Slowly, yeah, quickly. Jason Farley joining us now. Yeah, Johns Hopkins University Professor of Nursing. Jason, you do not get any sleep, so I don't know why I'm complaining. Let's start with what you're learning in the community right now about antibodies and what we should all need to know this morning.
Well, certainly. Well, good morning, Jonathan. At 6:50 hour, it certainly feels early to me. But we now know that we can differentiate vaccine-related antibody from disease. And that's a very good piece of information because it's told us, that when we're doing these large seroprevalence studies, which will ultimately help us determine what the total impact of this virus has been on populations, that we will be able to say this was vaccine-related antibody or disease-related antibody. And that's good information to know. Basically, the way we do that is we look at the spike proteins and the differences in where antibody production is occurring. So the vaccine does not produce a nucleocapsid-related antibody, whereas disease produces pretty much everything else. So we know if we see, an individual with nucleocapsid positive antibody, that's from infection. If they don't have that, that's from vaccine. It's an easy way of differentiating. And we now have the testing modalities to be able to do that. And that's important because particularly we're looking at things like the first cases of maternal to child antibody transmission, which is really great. So we'll be able to know, importantly, if that child received that IgG antibody from the mom as a result of vaccine or from prior infection. And so that's good news for the newborn receiving those passive antibodies. And so we're getting glimmers of hope that the youngest of the young, the newborn, will receive some level of passive protection for the first at least, several months of life.
Interesting. That's actually really interesting, Jason. When you put it all together, though, I do wonder what it means for the kind of levels we need to hit for vaccinations to say that we can all get back to normal. Do you think if you've had the antibodies because you've been infected, if there's enough of that in the community together with vaccines, it changes that number? And Jason, I guess the difficult question is, how would you ever know?
Yeah, certainly. Well, the large seroprevalence studies, those numbers are forthcoming, right? We're doing those studies right now through the Coronavirus Prevention Network type studies, which has multiple sites across the United States. CDC is doing seroprevalence studies. And these are the types of studies where in a single blood draw or a single saliva sample, we'll be able to tell whether or not the person has antibodies from vaccine or from prior infection. And so that helps us to build the picture of what the total proportion of antibody is in the population, and then get us at that, that mythical potential for herd immunity. Now, the question does remain. We've seen populations with large amounts of circulating antibody. We've repeatedly talked about, the course in Brazil, for example. And so the race against time, right, is that the antibodies cannot help in certain variants. They produce, people still get infected, people still transmit, depending on the variant. And so Brazil has seen a case where cities had herd immunity established, at least the estimate of herd immunity, and still began to see rises in cases, continued hospitalizations, as well as continued deaths in those circumstances where variants. So the push-pull for us is the race against time to get ahead of those variants to ensure that even when we get to herd immunity, that it's still going to be safe enough for us to reduce restrictions.
Do we have any sense of how long the immunization from vaccines, from being from having a prior infection lasts? And this matters at a time when we're talking about global vaccine passports.
Yeah, durability is certainly something that is on the minds of most vaccinologists. We've certainly seen antibodies wane in natural infection. We also know that you have higher antibody titers with higher, worse cases of infection. So those who have asymptomatic disease tend to have lower antibody titers, but those who have higher infection, levels of infection that will ultimately lead to hospitalization, but not death, we see those individuals develop high levels of antibody titer, but they wane over time. And then subsequently 6 or more months, we generally see antibodies, what we would think would be below the level of protection. However, there's a glimmer of hope with that, in that patients who've had prior infection who receive a single dose of vaccine have now been followed to determine whether or not that single dose produces antibodies similar to or equal or more than the both doses of a vaccine. And what we found is that after you've been infected, a single dose of vaccine may lead to antibody titers as high as the second dose of the vaccine. So that's good news as well, suggesting that you get a boosting effect from that first shot of those antibodies, which then helps us to realize that we will likely need booster injections regardless of whether or not we get ahead of this virus or not.
Jason, always great to catch up with you, sir. Come back soon. Jason Farley there, Johns Hopkins University Professor of Nursing. The latest number that we keep following for you, keep tracking here in America, 2.49 million doses per day. Your average daily vaccination rate in America over the last 7 days. Coming up, Chris Verone, Strategic Partners Head of Technical and Macro Strategy from New York City this morning, alongside Lisa Abramowitz. I'm Jonathan Ferro. Equity's doing okay. Bit of a rout yesterday at the close, up 0.25% on the S&P this morning. From New York, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We are re-emerging from a recessionary environment. And of course, this recession is different from some of the others.
The dollar was very, very expensive, and it's still expensive because the US had exceptional monetary policy.
While a bunch of the markets could look frothy, there might be room for the Fed to normalize rates.
He wants a steep curve, and we're getting that. And I think we all better get used to that.
For the Fed to think about inflation, they always keep on emphasizing it has to be persistent. It has to really be a situation where the whole economy is boiling over, and we're just nowhere near that point at this stage.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It is all about politics and policy from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene back on Monday. Here's your price action on the S&P 500 up 10 points. We advance 0.25%. On the Nasdaq up about 0.4%. The politics, the policy, an EU summit a little bit later this afternoon, Lisa, and President Biden with a news conference.
And very much the focus on China-U.S. tensions, which appear to be rising after their confab in Alaska. Now we're having the talks between the European Union and the United States. Really, the question, as you've raised, how much support will the U.S. and, frankly, the European Union provide their companies to offset any negative ramifications from China's pushback to measures by the West?
That's the relationship between the West and the rest of the world. We've got to talk about the relationship within the West, within the developed economies, because that spat between Europe and the UK, there's a risk it spills over to the United States as well over vaccinations. That's something that I think was talked about coming into 21, but not talked about enough when it comes to the market. We've gone from talking about synchronized global growth to something much more varied and broken down than that. It is not synchronized at the moment, Lisa.
Do you think, though, that that has to do with production of vaccines or simply the way that the rollout has taken place in the continent of the European Union, right? I mean, that's one aspect of this, the political posturing, trying to foist responsibility onto the vaccine producers rather than how the messaging has gone across and who's gotten the vaccine and when.
Supply, rollout, acceptance, and the issue around acceptance in Europe is something that needs to be tackled. Even if you do start to tackle the former, you've got to do something about the latter, and that's where the struggle is in places like France, Lisa. And that's why I think really interesting in the last couple of days, just to see euro-dollar break back down and maybe threaten to break through 118 after we've had all this bad news pile up around Europe and all this good news pile up around the United States. That one was pretty stable for a while, and then we've had the break this week.
The tension here of whether the opening later in the year, which is inevitable, right? I mean, the pandemic will end, and it will end for the European region as well as the United States. But if the delay is going to cause frictions that will cause less growth in that region, and actually at the same time that the U.S. is proposing more stimulus, that the U.S. dollar has potentially more upside, is a growing sort of contrarian theme that we're hearing among FX strategists.
Euro dollar unchanged this morning, 118.14. I'll whip through the price action this Thursday morning for you. In about 90 minutes' time, you'll get some data in America. Lisa's going to run you through it all in just a moment. Your equity market positive by 0.2% on the S&P 500, up a third on the Nasdaq. In the bond market, yields unchanged. Well behaved, Lisa, in the bond market. After yields have been pushing higher week after week after week, I think going all the way back to the end of January, yields unchanged, 161 on 10s.
Yeah, and meanwhile, you were talking about the data, and I didn't include in my look ahead this morning in 90 minutes that we're going to be getting jobless claims at 8:30 a.m. because that data has gotten so noisy, and the markets are no longer trading off it, which I find really interesting. I did put, however, 12 p.m. we are going to be getting that hearing on Capitol Hill of the tech giant CEOs. We've got Facebook's Mark Zuckerberg, Google's Sundar Pichai, and Twitter's Jack Dorsey all testifying on the role of their platforms in disseminating information. Really, to me, the key question question here is, how are they going to get ahead of regulation that seems inevitable? There's bipartisan support to try to curb some of the presence and, frankly, the immunity of tech giants over how the information gets displayed on their websites. 1 p.m., we have been counting down to this auction all week, the 7-year $62 billion of U.S. Treasuries being sold. The key question is, will we get a little bit more of a disruption? Yesterday's 5-year note sale was a snoozer, although Tom was watching it from the poolside and talking about the technicals, the bid Negroni spread he was talking extensively about on Twitter. And at 1:15,
the bid Negroni spread.
Classic, yes.
Totally.
Yes, very, very, yeah, it's bearish when it gets too negative, and when it goes bull, when it gets positive, everything is jolly. 1:15 p.m., President Biden is holding his first news conference. Expect him to host a series of questions on the southern border of the United States, on the U.S.-China relationship. To me, what might react most or sort of weigh most heavily on markets is what he indicates with respect to infrastructure spending and taxes. Who is he going to raise taxes on? How committed is he to raising the corporate levy rate? Because that, to me, is an area that he seems to be backing off a little bit.
We'll see. We'll see. I'm looking forward to this one a little bit later. Joining us now, Chris Verone, Strategas Partners Head of Technical and Macro Strategy. Chris, great to catch up, sir. Let's just talk about the selling. How broad-based the selling has been for you and the kind of indicators you're taking right now, looking at really closely.
Yeah, I'd say in the last week or two, what started as a very concentrated correction locally in tech in February has started to spread to the more cyclical corners of the market. I don't think any of this stuff is going to be fatal, but it's certainly uncomfortable. And, ultimately, probably the trickiest call in this business is attempting to differentiate between, just a pause or a correction versus the start of something more serious on the downside. And for us, the arbiter between those two outcomes has always been credit. So I take some comfort that in the last week or two, even as the equity selling has become a little bit more pronounced, a little bit broader, the credit conditions have actually held up fine. Double B, triple B has not widened. I think it's important to look at the credits of the really epicenter type stocks, the reopened names, the energy names. Credit hasn't really weakened to any meaningful extent there. So we'll watch this. I certainly think it's appropriate to raise one's guard here as we, get into the weaker seasonal in front of us. But credit conditions are still pretty tame, and I take some comfort in that.
As the selling broadens out, Chris, and you start to get some consolidation, where do you think the leadership comes from after a move like the one we're seeing develop?
Well, I think if you look at the last couple of weeks here, there has certainly been an improvement in the more defensive quarters of the market. You've seen it with staples. They've bounced here. You've seen it with utilities. They've bounced here as well. I don't think they're trend changes, though. And that's what's really important. If the market is telling us that 160 or 170 10-year yields is too high, I think we'd see staples and utilities outperform more meaningfully and more durably. I don't think that's what this is. Like, the most bullish case I can make for staples right now is just simply a contrarian one, that everyone hates them and they're quietly a little bit better. I don't think that's enough to really look to them as reclaiming the mantle of leadership here. I also find it notable from a leadership perspective, the last 2 or 3 weeks, industrials have actually started to firm here again. I mean, most industrials actually consolidated from December until mid-March. In the last 2 weeks, they started to firm. I think that's significant because of what you said in the intro here about the dollar. The dollar's rallied for 4 months. Like, this is not a new move higher in dollar. As the dollar rallied over the last 4 months, industrials consolidated. The fact that industrials are starting to take over leadership here again, I wonder if that actually means we're in the later innings of the dollar rally. And is it time to start to back away from some dollar strength here?
Wait, how much, though, is this completely relevant to the infrastructure spending plans that Joe Biden has unveiled?
Yes, certainly. We'll let the market kind of be the arbiter of that. When you look at the infrastructure-related stocks, I mean, for months and months and months and months, they've been kind of at the top of the leadership roles in our work. So I think, as you certainly know, and we certainly know, the market is really good at quickly pricing in new information. And the fact that those infrastructure-type names have been as dominant as they have been, not for a couple of days or a couple of weeks, but for a couple of quarters, I think is certainly suggestive of where the policy discussion is headed.
Chris, can we talk a little bit about the technicals underpinning this pause, this reset in some of the high-flying stocks of 2021? How much credence do you give this narrative that it's the Robin Hooders, the idea that the retail investor who just got their $1,400 check from the U.S. government now actually has other places to go to spend it other than the stock market, perhaps buy a plane ticket somewhere or go visit family? How much credence do you give this idea that they are pulling back, and that is a big reason for the underperformance of the Russell 2000?
You know, it's a good question. I think what's actually more important right now is you're going to get your February and March or first quarter statements, and you're going to see brackets around your bond funds. And most people in this business have never seen brackets around their bond funds. That, I think, is the catalyst ultimately for capital rotation. And, you know, perhaps it explains why some of the bond proxies in the equity market, the tobacco stocks, some of the energy names, some of the REITs have acted better here over the last, 6, 7, 8 weeks as bonds have gone down. Retail, who has frankly been long bonds for 40 years, is looking for bond-like substitutes in the equity market. So I think that is frankly a bigger story here than what seems to be the very myopic look at, oh, we just got a lot of money in bank accounts because of the distribution of the stimulus. Why are small caps not acting better? I think that's a little too myopic and short-sighted for what the bigger story here, and it goes back to, and Jonathan, I think we've talked about this before, certainly offline, when you look back at that GameStop media of mid-January, right, when everyone was so focused on GameStop going from 20 to 480 that week of January, what else happened that week? Well, German 30-year yields went positive that week. Swiss 30-year yields went positive that week.
Yep.
Austria sold 100-year paper that week, right? Where's the real bubble? Was it in the mania of GameStop, or is it in sovereign debt? That, I think, is the more important question for everyone out there.
Yeah, Chris, I think you're so right to bring it up. I think it was Peter Chu of Academy Securities recently in the last couple of months that put out a note about often the bubble is in the perceived risk-free asset where people don't think there is any risk. Chris, we'll have to talk about this another day, buddy. I've got to let you go. Chris Ferrone of Strategas Partners, thank you. And Lisa, this is something you've been discussing too for quite a while. It's always where you think safety exists, where the risk can really lie. And it's perceived risk-free asset, which people have been worried about for a while, that has started to bite in the last several months.
This idea here that we had the worst start to the year, this decade, this century, I should say, for global bonds, what effect does that have on investors? A lot of people have come on this show and they've said the effect is to rotate more into stocks, but how much is it the opposite and to hunker down and seek safety even more, John?
We're going to discuss this a lot more going into quarter end, that's for sure. Coming up, 8 a.m. Eastern time. In around about 50 minutes, we'll catch up with Seema Shah, Principal Global Investors Chief Strategist, as we count you down to hearing from President Biden a little bit later. Equity futures up 7 points on the S&P. We advanced 0.2%. Your bond market yields are higher by almost a basis point to 161.56. From New York City, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. An elite crew of salvagers will try to free that massive container ship that's blocking the Suez Canal. The stakes couldn't be higher. What is considered the world's most important waterway. About 180 ships are gridlocked along the canal, which connects the Red Sea to the Mediterranean. They're carrying roughly $10 billion worth of oil and consumer goods. It's the first real test on North Korea for President Biden. Kim Jong-un's regime fired 2 ballistic missiles. That's a violation of UN resolutions. The South Korean military says the missiles landed in waters between Japan and the Korean Peninsula. It was the first North Korean missile launches in roughly a year. And Bernie Sanders is proposing bigger tax increases than the ones President Biden is considering. The Senate Budget Committee chairman told NPR he'll introduce legislation to raise the corporate tax rate from 21% to 35%. That's what it was before Donald Trump's 2017 tax cut. Sanders also is pushing for a surtax on wealthy Americans. The Securities and Exchange Commission reportedly has started an inquiry into the frenzy over SPACs, the special purpose acquisition companies. According to Reuters, the SEC has sent letters to Wall Street banks on their dealings with SPACs. Regulators want to know about deal fees, internal controls, and compliance. And the fintech Plaid is reportedly wrapping up a funding round that values it at up to $15 billion. That's according to Barron's. Just 2 months ago, Plaid called off a $5.3 billion sale to Visa. The company lets users connect their bank accounts to finance apps and transfer money. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
In the near term, we do expect, as many forecasters do, that there will be some upward pressure on prices, and also there'll be a technical thing of base effects as the very low readings from April and March of last year drop out of the 12-year calculation. We don't expect that that upward pressure will produce substantially higher prices or that the effects will be persistent. We expect that they'll be transitory or temporary.
That is going to be the buzzword for the next several months. Transitory. Jerome Powell, the Federal Reserve Chair there, talking again on Capitol Hill from New York City this morning. Good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Here's your price action this Thursday morning. Equities pushing higher, snapping back. It's a small bounce, a mild move, up a little more than 1/10% on the S&P 500. We fade a little bit. On the Nasdaq, we advance a little more than 1/4%. In the bond market, yields unchanged now, 160.85 on 10s. And euro-dollar not really doing anything either. Euro-dollar 118.13. The chairman is sticking to script. He repeats that script again, speaking to NPR. He says the following: the upgrades in the Fed forecast reflects vaccines and fiscal aid. When the economy is fully recovered, we will roll back aid. And then finally, Lisa, strongly committed to 2% average inflation over time. We've heard that a lot from the chairman. He is sticking to script again this morning.
He should just send in a cassette tape. Yes, I'm dating myself, and just press play and everybody can understand. You know, yesterday, the one thing that really stood out to me is he said that he did not observe disorderly market conditions in what we had seen, and that was a measure of when he would view the Fed as needing to step in to stem the tide of yields going higher. The key question emerging for me: what does disorderly look like? How high is the bar, and how much does this lie in credit markets, John?
I wish Tom was here for that moment. A cassette tape. A cassette tape.
Well, I mean, I just think that what else are you going to do to press play? I guess you could have like a CD player. I guess you could just bring your iPad in.
A cassette on. Have you got anything left?
No.
What's in the Abramowitz?
I just remember making mixtapes. I just remember making mixtapes and then decorating.
I used to record the radio too.
All right, carry on, John.
Good times. Tom Keane did it on vinyl, long time ago. Long time ago. Those old school record players, you know, when they came around. The 20s was a great decade, he tells me. For markets too, he learned a lot of lessons. Tom will be back with us on Monday. Looking forward to that, and I hope he's watching too. Kevin Cirilli, Bloomberg Chief Washington Correspondent, joins us now down in D.C. Kev, good to catch up, sir. We have a news conference with the President of the United States. Why is it taking so long? That's the question I've been confronting every single hour of this morning.
Yeah, John, you know, when I talk to sources at the White House as well as lawmakers on Capitol Hill, they say that it's by design, right? That they wanted to come in and have a decidedly different approach to dealing with the press than the previous administration, and that's what has happened. Now, that has actually, if it's to peel back the curtain a little bit, has caused some type of friction between the White House press corps as well as with the administration. But you know, we'll see how today's press conference goes.
If there's a question, a topic that you think this president would like to avoid today, Kevin, what do you think that topic would be?
Oh, I'm not sure. I think maybe anything pertaining to his own political future, as it relates to, you know, whether or not he's going to seek a second term. But I think in terms of policy, you know, I think Jen Psaki will brief him accordingly.
There's a question also about gun control and what his guidance there will be after the shooting in Colorado in a grocery store that left 10 people dead. Are we expecting any policy announcements, given that he has started to talk more about this issue?
You know, yes, and I think that already the administration has come out and said that they want to support legislation that they argue would close gun show loopholes, as well as to provide background checks for any individual who wants to purchase a gun. Let's be candid, it's a lot more complicated of an issue than that, especially when you've got places all around the country at where people purchase guns outside of gun online and outside of gun stores. But I want to be frank here. This has policy implications, and we've talked about it here before, but it bears repeating. The filibuster. Should Senator Joe Manchin, a centrist Democrat from West Virginia who is a staunch bipartisan ally to people like Senator Toomey and other Democrats on some type of significant gun reform, should he feel that this shooting needs to mandate change, then he could support the filibuster. And that in and of itself, that process move would have deep implications on a host of every other issue that we talk about on this program, from geopolitics to raising taxes.
And we'll have to have you on to talk specifically about what getting rid of the filibuster would look like. In the meantime, we keep talking about infrastructure planning that might be years out. I mean, $3 trillion spent over a decade. There is a nearer-term concern. There was a recent IHS market survey of business leaders in the United States where they said that they are seeing the most severe supply disruptions that they have ever seen in as long as this survey has been in existence. Is there any talk about immediate actions to try to shore up some of the supply chains or offer incentives to companies to bring production back to the United States?
Yes, and I think you're starting to see this. I think yesterday I spoke with some lawmakers who pointed to some manufacturing loopholes that they would like to see closed, and I think you could actually see some bipartisan agreement in terms of attracting other businesses like Intel, which is that $20 billion investment in Arizona, to do just that.
Kevin, good to see you. Looking forward to the news conference a little bit later, sir. Kevin Cirilli, Chief Washington Correspondent, and of course, host of Sound On Bloomberg Radio.
There you go.
If you don't hear the enthusiasm, I'll do it again. And the host of Sound On Bloomberg Radio a little bit later, 5 Eastern, with Kevin Cirilli. Looking forward to that. Lisa, let me pick up on some news coming out of the UK, and that's some reporting around the Prime Minister Boris Johnson, looking at potentially a role for vaccine certification as the country moves out of lockdown, and potentially hearing a little bit more of that in the first or second week of April. And that conversation's been doing the rounds here in the United States as well. We still do not have enough clarity on what you can.
Okay, ladies and gentlemen, if you are ready to trade Bitcoin, here is your chance. So I am going to place an order to buy Bitcoin. The price I'm looking to buy at 52,796. 52,796. Okay, so if you're up to Bitcoin, please follow this trade. Please, you can copy order, you can place an order, and wait until it will get filled. Okay, so our indicator told us that it's a time right now to buy Bitcoin. Just want to remind you that we make profit from Bitcoin not based on pips, based on percent, so 0.1, 0.2, 0.3%, and so on. This is just a reminder. I'll speak to you later, guys. Stay safe.
Get the global economy back on its feet.
Some people get very angry about this. We're waiting for the government to tell us what we can and can't do. And people are sick to death of that conversation, particularly in the United States of America. Coming up, David Leibovitz of JP Morgan Asset Management on this market, with equities turning just a little bit lower now. Equities down 2 on the S&P. This is Bloomberg.
Okay, guys, position opened on Bitcoin at 52,796, as you can see. So all of you guys who placed an order, you opened your position at 52,796. Still keep hold your position. We never sell at losses. So if you don't know why or how, you need to get a strategy. You can get strategy information you can get from our screen right now or from Company Eye website. Stay safe, guys. I'll speak to you later.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio, and here's the price action. Equity futures roll over a little bit, slightly negative now on the S&P 500. Underperformance again in the Russell, down 0.4%. Outperformance, relatively speaking, on the Nasdaq, still in positive territory. What's interesting about this move, crude just rolls over, gaps lower, down by 2%. And seemingly taking everything with it. We spent a lot of time talking about what's in a driving seat in this market, cross-asset. Spent a lot of time talking about treasuries. Relatively speaking, I don't think we've spent enough time talking about energy and how dominant the energy story has been as a factor to how people view things cross-asset. And we'll do that in just a moment. Switch up the board and go into the bond market. 2s, 10s, 30s. 2s went well, 5s were solid, 7s later. Yields on 10s, 160.85 unchanged. On 30s, 230.64. Let's finish on euro dollar. SocGen out this morning. They keep it simple, keep it brutal. A crisis of confidence in European growth. That's where we're at. Euro dollar just about holding on to 118 through the 200-day moving average a couple of days ago. Right now 118.12 and just about unchanged on the session as well. And it is all about differentials. It is not about the synchronized story coming into this year. And I wonder how that develops. We all do in the year ahead. We know what the first half looks like now. It's not synchronized. The US is leading this story. What does the back half look like? And can Europe start to catch up? That's another question for a little bit later this morning. That's your cross-asset price section. I believe we've got some movers with Taylor Riggs now. Morning, Taylor.
Good morning, John. And, you know, you're talking about energy and the frustration with some of the supply chain disruptions that you're seeing with that ship backed up in the Suez Canal. Take a look at Union Pacific. They were up much more earlier in pre-market trading. Railroad traffic in North America is up 9.5%. We are getting back to normal with railroad traffic. We take a look at Nike. This is not a fundamental story yet, but John, we're watching to see if this becomes one. The Communist Youth League has dug up...
Great trade, guys. Well done. We close position on British pound, as you can see. This is just great. And you're probably collecting your profit. I will publish for newbies how much we made in profit. And, well, this is really good. It took us a couple of hours to complete and close the trade. So, good. Well done. For anybody who wants to get the strategy, you can go on our website, or you can see on the screen how to get the strategy. You can register for a 15-minute coaching session that's quite popular right now with our company. So still a couple of slots left, so don't be afraid. You can register and you can ask any questions you want. I'll speak to you later, guys. Stay safe.
Change Section 30. Twitter says, we're not sure, we'll get back to you. Let's get that answer. this afternoon on Big Tech Hearings.
Looking forward to the coverage this afternoon. Taylor Riggs, thank you. Coming up on the close a little bit later on this afternoon on Bloomberg Television. I want to talk about this market just quickly. Crude rolling over. WTI now down by about 2.2%, off by a little more than $1. I want to bring in David Leibovitz, JP Morgan Asset Management Global Market Strategist. David, we talk a lot about the bond market being in the driving seat, not enough about the energy story. What's your take on that right now?
So I think